On this channel, every single month we look at the market report and see where the Calgary real estate market's headed. We take a look at overall stats per segment, sometimes depending on different quadrants in the city, see where the benchmark pricing is. But sometimes I'm going to reverse the slogan now, where you lose sight of the forest for looking at the trees. But now, since we've only been focusing on the forest, this video is about looking at the trees. And what I mean by that is we're going to take a look at more specific data, take a look at individual property types, not just as a segment overall, but take a look at different parts of the city and see how they're performing, how they're doing year over year, and where the real opportunities lie. Because one of the biggest problems in markets like this is the headlines are everything and they trend, and people tend to apply that sentiment to the entire market and fail to see the opportunities that lie in the market. Over the last 2-3 years, people absolutely love to FOMO, and the market was just trending up. We had double-digit gains year over year, and people felt like they were missing out and everyone was jumping in. And now we are in a market where the headlines might ward a lot of people and just make them sit on the sidelines and watch the market from the side without realizing that the exact property type or community or area of the city that they are looking at are actually behaving differently than what the overall headline says. And that's why it's really, really important to do a video like this so that you understand where you are positioned in this market and not just where all the buyers or all the sellers are together. Hopefully you find value in this video. I'm going to put, of course, time markers so that you can go to your specific property type too, and you don't have to sit and watch this entire video, and that will make it way more useful. And if you have any more questions or you would like even further broken down data, definitely reach out. My links are in the description. I would love to provide that data for you, extract that out. I do data on my backend spreadsheets that is completely different from what Calgary Real Estate Board releases. And in combination with the two, I create more in-depth analysis and things that you see on this channel. Before we get started, I have to call out that I have two community guides in the description down below. One is the community guide and the other one is the buyer guide. Both extremely useful if you're looking to get into this market. However, the community guide is something I would especially draw your attention to, as this one has raving reviews and people really, really find this extremely useful. And the reason it's completely different from what you'll find online, because it doesn't just focus on the amenities and possibly the price and everything that a community is about, but it goes into the vibe of what the lifestyle in that community is. And so it has reviews of people who actually live there, the price points, what types of construction you can find there, and where the market's at right now for that community. And so if you're looking to get into the Calgary real estate market, whether you're just moving across from one community to another, from one part of the city to something completely different, or you're moving to the city, this is going to be extremely useful for you. So definitely get that community guide down below. You can scan the QR code. It's extremely easy to just get it on your phone right away without having to find that link in the description. But if you're on your computer, of course, the link in the description, way easier. So first, we're going to start by taking a look at the overall benchmark pricing per property type and then total residential. And then we will start getting into specific details for each property type. Total residential right now sits at $577,200, which is a year-over-year decrease of 4%, and that is across all property types. As far as detached goes, detached is actually down by just 1%. And now when we look at the property price, that's not a whole lot. That is just about $8,000. So $755,600 is where we sit for detached right now. Duplex is actually doing really well this year because it's that perfect price point where you still feel like you own your own land, you have a freehold house without having to settle for a townhome or an apartment, which was all the rage for the last 2 or 3 years. So as you can see, duplex properties are now at $687,200. So we actually have gone up by 1% year over year. Row townhomes is at $439,600, and we are down by about 5% year over year. And apartment prices have also gone down, and they're down by 6% year over year. And let me tell you, that's a very conservative number. When we look at specific areas in the city, it is significantly lower than that. Before we get into specific details for each property type, what I want to do is take a look at the bigger picture from all the way back in 2011, just to understand how things can change when we get into environments like this, where we go from a very, very strong seller's market to a balanced market or even buyer market in certain conditions. So right over here, you can see this is broken out by property type. So you have the red one is the single family, and then you have row townhomes and apartments. So when it comes to row townhomes and apartments, which is the multifamily housing of the city, you can see as we go into that downturn all the way from 2015, which was our peak pricing, and then we had the reversal of the market all the way to 2021. Two things. Multifamily properties such as row townhomes and apartments are far more volatile than single family housing. Single family housing doesn't change that much from month to month. We generally have a trend for a few months, then we change in the other direction, seasonal data together with this, but we go up and down. But when we look at the apartment and row townhomes, there's a lot more volatility. You can see all these micro points change in direction. And that is because there's a lot of uncertainty in terms of where the prices are headed. This is usually an entry level for a lot of first-time home buyers, but also speculation for investors. And so you tend to have a lot more change in decision making short term. And that's why I want you to be very careful if you're trying to enter the row townhome and apartment market to focus or zone in too much into short term data. You shouldn't be looking at where things are going month to month, but generally where the trend's headed. And I try to understand where the opportunities lie in terms of where new constructions are coming up in the upcoming years and how that's going to affect your property value going forward. However, if you're looking at single family, one thing I want to point out is while we have lesser volatility than the multifamily housing, the other key thing to look out for is we had a house price index right around here of about 212, 215. And by the time we had finished the correction all the way in late 2020, we had only hit a house price index of 200. So that is a drop of barely 5, maybe 6%. So you have to understand that long term, detached homes and duplex homes do not go down as much as other property types. However, what the headlines are going to tell you, and if you're just looking at news headlines, they are going to focus on this. So they're going to capture the peak and they're going to capture the bottom and tell you this is how much the Calgary real estate market's gone. But it's very important to understand that you break this down into specific property types, understand long-term behaviors and how these properties react to different sentiments in the market. When we were on our way up, of course, detached duplex went up a lot in that amount of time as far as house price index goes. And so there's less of volatility in the townhome and apartments because of the amount of euphoria we had in the last 2-3 years. But now on the way down, I do expect a lot more volatility again for multifamily housing. And detached won't correct as much. And history has shown this. So you have to compare how much you're paying in rent, how much does your current place cost if you're looking to either move up or move down. And you have to run those numbers, see whether paying someone else's mortgage is really worth it, and how you can protect yourself by creating enough buffer in the amount of down payment and the price that you're able to capture that property for today, so that even a year later, if the property prices come down, you're still up as far as equity goes. And if you want those in-depth discussions, depending on which part of the city you're looking at, definitely reach out and I would love to help you and capture that specific level of data for you. The other thing in the news that we need to watch out for is interest rate cuts. So BMO is actually forecasting now that we are expected to have 3 rate cuts before spring 2026. And that's because Bank of Canada only has a single mandate, unlike the dual mandate in US. So with the single mandate now, we're going to shift from inflation over to recession as our priority. And we require that stimulation in the economy. In the past, rate cuts normally also stimulate the real estate economy and real estate prices go up. And we haven't seen that happen this year while we had interest rate cuts because there was a high level of uncertainty across all provinces. The 2 other major markets such as Vancouver and Toronto are having a very difficult time with their real estate market. And Alberta, not so much as those 2 markets. We've still seen a lot of interprovincial buyers still try to move in, still a lot of buyers within Calgary itself moving across. Of course, the activity is nowhere close to what we are seeing from compared to last year. Certain property types, however, still doing well, and we will go into that. But what's expected now going forward is through these 3 interest rate cuts, I think it'll balance out the pricing. It will not stimulate the pricing where we will suddenly see a huge amount of people jump into the market. But there are a lot of buyers that have been waiting this entire year on the sidelines, decided to rent one additional year where they are, decided to push their move 1 year ahead, just waiting to see what happens with the tariffs, what happens with the recession, what happens with, is inflation going to remain sticky? And now, since a lot of those things have pretty much locked themselves into a certain trend where you can kind of identify where the market's headed, whether good or bad, people now have started moving on with their lives. And so I'm seeing more people reach out. And as we get a few more buyers, things are going to balance out in very specific segments of the market. Overall, the market will still trend down, but there are certain property types that I think will benefit from this. Now, looking at the total sales across Calgary. So as you can see here, year over year, our sales are down by about the same amount that the inventory went up year to date overall. And some of that inventory increase definitely has been in the detached part, as you can see here. But a lot of that is also in the multifamily housing, so row and apartments. However, in that exact same amount of time, while detached held relatively well in terms of sales, it didn't drop by that much when we look at it year to date. But what really did drop is the amount of apartment sales. As you can see, this was the amount of apartment sales that we had last year. But you can see the apartment sales here does not even compare. And same thing for townhomes. So townhomes was about that much, and then now we've also dropped. So that has significantly brought this overall graph down. And so when we talk about total sales numbers, that's why it's important to break it down like this, because we just think overall sales is down, but certain segments of the market are holding up really well. And now let's get into more details specific to each property type. So as you can see here, for us, total sales, as far as detached goes, we're down by just a little bit, while inventory also just went up by about a little bit, not too much. So we are sort of okay, but you will see why this is not a problem when I compare it to other property types. As far as duplex goes, our sales dropped very less compared to the amount of inventory. So of course there is more pressure for prices to come down. However, certain segments, certain parts of the city are really holding up the overall duplex. So depending on where you're planning to buy your duplex property, it might undergo a very different trajectory in terms of the price drops that you're expecting to see for the rest of the year. And when we look at townhomes, now this is where the problem really starts showing. So as you can see, the amount of sale drops, and as far as the amount of inventory increase, so new listings. So we had a huge amount of new listings show up, and the sales also dropped by a huge amount compared to other property types. And this gets even worse for apartments, where the inventory, you say the new listings maybe just held, and we saw about the same amount of listings as we did last year. However, when we look at the sales, we had a huge drop in sales for apartments. And so this is really what's bringing down a huge part of the market. And it's also bringing down certain quadrants of the market. So parts of the, for example, northeast, east, and even north, where there's a lot of apartments and there's a lot of new construction for apartments happening at the same time too. It's just bringing down the overall benchmark pricing for that particular part of the city. And it just reflects negatively, not to say that the market's not coming down, but if you were looking for a different property type in that area, it's very important to understand how that specific property type is behaving for that quadrant in the city. And so now let's take a look at that. Taking a look at the benchmark pricing broken out by different parts of the city. So as you can see here, city center for detached homes is obviously leading the way and is what's holding up a lot of the other losses that we're seeing in other parts of the city. So when it comes to city center, we are up by 2.36%, and that's the only part of the city that's up. However, when it comes to northwest and west, they're actually holding out pretty well too. It's barely a 0.14% decline, and this is year over year, so it's almost nothing. It's the same price. So if you're trying to get into these parts of the city, you have to calculate what the difference is for staying out of the market versus trying to get in. And as far as northeast and east goes, there is no surprise there, as those are the parts of the city that are really taking the hits. Northeast down by 5%, and east is down by 5.5%. So of course, those are the most least appealing parts of the city that people want to get into. And now, of course, we're going to see lesser and lesser buyers get into those areas. And they're going to have significantly more inventory, so at 4.45 and then 3.81 compared to the rest of the city. And as far as North goes, we are at just drop of 3.64%. So North does has a couple of its disadvantages, which is why it gets a lot of association with Northeast. Plus, because of the amenities and the access to the rest of the city, Northwest is definitely more preferred than North. However, North is still a highly desirable area, especially certain areas way up, especially coming up now. They are actually located perfectly in really good areas with good accessibility. So if you're looking to get into that area, definitely reach out. And finally, Southeast is just dropped down by 2.32%. Now, when we take a look at the amount of sales per day, so this is data that I collect on the back end. This is not available anywhere else. I just collect this to understand the overall sentiment because we are able to then predict where the fall markets are, where spring's coming in. And as you can see here, we did not sustain the spring levels that we had last year. So last year we started the spring levels around April 3rd and we went for 2 whole months. Whereas here we had spring levels of only about 2 weeks before sales per day started declining again. And then we saw a surge right here in mid-August. But again, we have not held that. So here we had all the way from September to October, so about 1 month. But here we've just held it for about a week, maybe, and then we started declining back up again. So that's how detached sales are when we compare them to year over year. However, they're still good because we're able to hit that peak sentiment values that we had from last year. So the fact that we've able to achieve these peaks is very, very different from how the other segments of the market are behaving. So if you have a really good property that's marketed really well and is priced correctly, it will sell in this market because there is obviously peak sentiment in certain parts of the market. It's just a matter of understanding how to position yourself, because over the last 2-3 years, people took a very lazy approach of just getting listed and expecting multiple offers, but that is not the situation anymore. And now when we take a look at specific breakdown in data, so this is the amount of price drops that we are seeing in detached. So as you can see, it's been pretty consistent overall, and we're not seeing a huge increase either way. So we're not seeing the price drops decrease, but neither are we seeing them increase. It's just consistent in terms of what's being expected as far as pricing goes, because a lot of people are still mispricing their property in detached, and that's the biggest problem right now. And even despite the price drops, the amount of properties then that's selling below this price are also consistent and just moving sideways, very different from other property types, as we will see. So this should set your expectations both as a buyer and seller for how much you can negotiate and how well you should be pricing your property in order to sell in this kind of a market. As far as days on market goes, the trend line, so this is the trend line, it's also mostly just moving sideways. If anything, it's actually started increasing a little bit, but that's just been since the start of August. So it's nothing significant just yet that would point out to a complete change in the market. And as far as our trend line for the sold price, you can see here we were dropping at the end of July. And once we hit August, now we are more or less just trending sideways when it comes to the sold price. And this is the affordable section of the market. So this is still up to $1.5 million. If you want to look at data beyond $1.5 million, that's a completely different chart type. So definitely reach out if that's the segment you are looking to shop into. Now we're going to take a look at duplex property types broken out by different parts of the city. And this is the one that has gone up by almost 1% when we take a look at total benchmark overall across the city. But if we break it down by certain quadrants, as you can see here, city center again is where it's doing really well. So we're up by 1.97%. And no surprises that, again, east and northeast are the ones that are dropping. And north is also down by 3.5%. So northeast, east, and east are the ones that are generally going down. Northwest has gone up again by 1%. So northwest and city center are doing really well. West also doing really well, barely 0.06% decline or increase actually. So it's almost balanced out. And then south is down by 0.6%. Southeast is down by 0.8%. And these are, again, insignificant numbers when you just take a look at the total pricing for the properties. So again, duplex properties are doing really well and do not match the overall sentiment that people think is happening in the Calgary real estate market. So depending on which part of the city you're looking to get into, you can see what's happening and what you need to watch out for. And that will help you weigh your decisions in terms of, is it worth continuing to wait on the sidelines, or are there opportunities to take advantage of right now? Because this is exactly what I mean when I say that the overall sentiment is relatively negative, and that's why you can take advantage a lot of these pricings. Because even though the benchmark is marked at 812, for example, if a property gets listed at about 650, 700, that generally sells for about 625. So there are still good negotiation strategies to try and get that pricing and take advantage of the sentiment that we have in the market right now. And so if you're selling or buying anytime in the next 3, 6, 9 months, definitely reach out right now and we set you up with a game plan depending on where your property is located and what your specific strategy would be like. Taking a look at the sales per day, as you can see now, there's a slight change from what we saw in detached. So in terms of the peak sales, we didn't even manage to reach, even though it's just a little apart, but we didn't manage to reach the peak sales that we had last year. And then on top of that, we didn't even sustain it. So even though detached properties were able to at least sustain it for 2 weeks, here we held that high for about a month when it came to duplex properties. But here we barely had a day of it, and then it came down very, very fast. Now, the reason duplex properties are doing really well year over year too is because we've managed to come back up pretty fast for the fall market. There's been a good amount of demand, and we're sustaining that going sideways. Taking a look at the specific breakdown and the other data that I usually collect on the back end, as you can see here, the amount of price drops were peak around mid-August, and now that has actually started reducing as sellers are able to price their property correctly in line with expectations for what buyers are willing to pay. But also, there is a bit more demand now for duplex properties compared to other property types, and they still remain affordable without having to compromise for a multifamily home. And if you look at property selling above or below this price, that has more or less trended sideways with a slight decline on the downside. So even though this is going up, people are still paying below this price when it comes to putting offers in. As far as the days on market, you can see that has actually started trending a bit down. So properties are not staying on the market now as much as they did before. And this is just a trend line. It's not specific numbers, but it'll give you an idea of where the market's headed in terms of sentiment, as you had a peak right here. And now that has started going down as we went all through August. And of course, then that was going to have an impact on the final price. So as you can see, the price right here, we trended down through July over here till August, and then mid-August going forward and into September right here, we have actually started trending up. So we are setting higher highs going into September. And so duplex properties are doing actually pretty well so far. Now looking at townhomes, that's where things are going to really start changing, and it's going to get even worse for apartments. So as you can see, the losses across the city from no matter which part of the city you're looking at for a row townhome is pretty significant. The only one that is doing relatively okay is potentially Northwest, and Northwest is still a more luxury part of the city. Everywhere else, we are seeing significant losses, especially in Northeast, as there's rampant construction of new townhomes. And even East is going to see a huge amount in terms of the drop in price, just because we have huge amounts of rezoning that happen there, and all the MLI Select projects, there's a lot of them actually in East. And so as those come up, there's just lesser and lesser supply available on the market. As far as other parts of the city, you can see even North not doing really well, and then city center just dropped by about 2.15%. So depending on which part of the city you're looking at, this is year over year benchmark price change, and you can know what you can expect compared to where your pricing was just about a year ago. And here you can also take a look at the supply. So generally above 3 is your balanced market, and then if you exceed about 4.5, some will say 5, you're starting getting into a buyer's market. Right now it looks like none of them still are. However, East is pretty close up there. Taking a look at the sales per day, as far as the peak sales, we came pretty close to last year. I would even count it maybe we actually hit it, but we were not able to sustain. We had some euphoria right here, and then the Trump tariffs and the panic that happened. Then we came back up a little bit, and then we dropped again. So again, you see what I mean by multifamily has a lot more volatility as far as sentiment goes. We don't have that quick of a trend change when it comes to detached and duplex properties, but here it will just constantly keep changing month by month, and that's why you don't want to look at monthly data. You want to look at the overall trends, but also what's happening in the market, what news has been announced, and where the market's headed, and what we can expect on the impact of prices. And then, so as far as the fall market goes, we again hit those levels. Actually, we didn't. We were pretty far for fall. So again, that negative sentiment has held out, and that has resulted in the pricing continuing to come down, and we saw a huge decline in the amount of sales per day. So that's where the sentiment is headed in terms of daily sales. And then now when we break out into specific data, this is data that I collect on the back end. So as far as price drops go, we have been mostly just trending sideways with a slight increase right around here. And then as far as selling above and below this price, you can see properties have been selling more and more below this price as time goes. So there's still more negative sentiment weighing down on the market. And that then directly shows you that properties are going to be lasting on the market even more. So the days on market that properties have to spend before they sell is actually going up heading into late August and September. So properties are going to sit for longer, and that's going to result in an increase in concentration of the properties actually selling below this price. And then when we look at the sold price, there's a slight increase here. However, it's not enough to point to a trend because it's barely 1 week of data. So depending on what ends up happening next week, this will either continue trending sideways, or it may even come down a little bit. And that's what's happening with townhomes overall. So as you can see, overall the sentiment's pretty negative when it comes to townhomes, and that's why there's a lot of great deals to be had. Some of the factors that you want to take into consideration is not just the property that you're buying and what amenities are available to you as you're moving in, but take a look at what builders are building around you. Go to the City of Calgary map where building permits have been, it's public data, you can see that. And then what you'll understand is what you can expect for that empty land next to you, or what new communities are coming up next to you and what builders are planning. Because if there's a lot more multifamily townhomes coming up, they are going to be a future competition. And I like to say this, as much as people say this is going to be my forever home, 70% of people generally move within 3 to 4, 5 years after moving into their home. And so by the time those housing starts and those homes come in, if that's the house you're going to be competing with, you have to be prepared for that. So that's also something that's going to weigh down on this pricing, and that's also going to apply to apartments, and that's what we're going to take a look at next. Right here for apartments, you can see the drops in pricing are significant, and a lot of that is being weighed down by what's happening in the Northeast. So Northeast really is not just weighing down all of the apartment segment, but they're also weighing down the entire market sentiment overall. And it shows the market headlines as Calgary real estate market crashing, going down, blah, blah, blah. A lot of that really comes from these numbers in the apartment segment. So Northeast is down by 11%, and North is down by about 7%. You have Southeast again down by about almost 8%. East is down by almost 10%. So you can see the declines overall quite significant, and then it kind of balances out and shows as only 5.77. But depending on where you're in the city, you might have a very, very different experience. Why? Because the months of inventory now is very, very different. Right in Northeast, you can see we are at 6 months of inventory when it comes to apartments. But in certain other parts of the city, which is, let me see which one's the tightest. So right here in Southeast, we are only at 3 months of inventory. So this is more balanced market. But otherwise, a lot of the other numbers are heading clearly to a more buyer's market condition, and that's going to drive a lot of price declines. That's going to drive a drop in sales because more people get pessimistic about the market, and then that's going to constantly, and it's going to be cyclical and increase the amount of negative sentiment that we have in the apartment market. But what does this mean for you? There might still be really good deals to be had if you know how to analyze the market, to understand what future construction is coming up around you, because a lot of the housing starts really are rental units. However, if you want to start an Airbnb business, if you want to have that side apartment rental business where you're doing short-term rentals, there might be a unique advantage to take advantage of this sentiment in the market right now, to buy in very specific buildings in certain parts of the city that have that advantage of not having land around them, so more construction cannot come up. But then now you have the higher ROI, so you're not dependent on longer term rents Instead, what you can calculate is what your safety buffer is, how much risk you are allowed to take, and then on top of that, what your year-over-year profit margin is. And you can capture some Airbnb properties around the city, and there's some really, really good properties that are coming on, but they stay on the market because of the overall negative sentiment and just people not taking action right now and just waiting on the sidelines. So if that's you and you want a lower risk, lower investment property, more on the Airbnb side without spending five, six, seven, $800,000 on a detached or duplex, definitely reach out. There might be some opportunities for you right here. Now taking a look at the sales per day, and you can see what I mean. This is in stark contrast to what we saw for detached, duplex, and maybe even townhomes. So apartment sales came nowhere close to the peaks that we had last year. It's a far cry from not just reaching those peaks last year, but also being able to sustain that for a long period of time. So we've not reached that, plus we've just mostly trended sideways, and we didn't even have a surge for the August time. So it's just been a slow kill into the winter months. And this is what happens during the winter. So we're usually around here. And so if you're already here, I would expect us to go even lower by winter, which means we might actually be around this range as far as the overall sentiment. So for the next couple months, there might be some really good deals to take advantage of before certain things change and first-time home buyers come in after the interest rate cuts. Now, as far as average price drops, you can see the amount of price drops increase, clearly reflecting that downward sentiment. This is something we've not seen in other property types. So not only a huge increase in the amount of property, to the extent to which we're having price drops, but also the frequency. So the density has increased, and that has then directly reflected in property selling above below list price. And this is what I mean by the trend line heading towards good deals. So this is going to go lower and lower into the winter months, and there might be certain gems in the market that you can take advantage of. There's a sharp increase in the amount of properties staying on the market. So average days on market is getting longer and longer, and that has then reflected in the sold price. So as you can see, the sold price just constantly trending downwards, and it's just going to keep going that way because it's a clear trend line of where we are headed as far as the apartment market goes. Now, the final piece of the puzzle that we definitely want to look at is the sales by region, and this is going to make everything make a lot of sense in terms of where I'm expecting the market to head as far as each part of the city goes, also based on price range and what we can expect next. So this is total sales across all of Calgary, and something that generally always happens, and this is something we've observed year over year over year, and it's just how it works, is the first thing that goes when it comes to the upswing, no matter how big that is. I'm not saying we're going to have last 3 years repeat again, but if there's a change in sentiment, that generally always shows on the most expensive part of the market first. So generally what's going to happen, and I can't give you a timeline of how long that's going to take, but this is something that we are going to keep an eye on and observe, because then it'll indicate how quickly we are headed there. So it's usually, the best analogy is like almost imagine a traffic stoplight. So the first thing to go through is the $1 million plus. So as far as total sales across Calgary, above $1 million, we are more than last year. So we are actually selling more expensive properties this year than last year. And what's going to happen is once this gap becomes too much, once it becomes a little too expensive, those buyers are going to move down. And that then goes into this price range. And so this will start going up relative to last year. And then what happens is those buyers will find that segment too expensive in terms of the price increases that are happening. And so those buyers, then they will start moving here. And so that's what happens, and that's how these price segments move through the traffic light. And so those buyers keep moving down until they reach the affordable section again, which then drives these all pretty much up at the same time, depending on which part of the market you're looking to get into. And so this is across all of Calgary. Let's take a look at what different parts of Calgary is doing for this right now. So when we look at East, obviously sales are down across the board. Doesn't matter where you are looking at. It's just extremely low in terms of overall market sentiment. In fact, if you look at the apartments, the affordable section, there's huge declines all the way back from 2022 to now. Sales have just been dropping dramatically. And when we look at the Southeast, So you can see here, we already saw an increase over the $1 million range. And now some of that has started coming over into this part. So we have about people from 700,000, people from 700,000 to about $1 million. So we are seeing an increase of sales. So we are actually selling more properties in this range compared to last year. And the affordable section right here, which is your 600,000 to 700,000, way more sales than last year. So Southeast is doing really well in this particular price segment. It's not doing well for townhomes and apartments, but it's doing really well for duplex and detached. So that is something that we definitely want to keep an eye on. As far as South goes, you can see sales down compared to last year overall across all price ranges. But right here, you can see $1 million again, more than last year. And then also these luxury properties are $800,000 to $1 million, also doing better than last year. When we take a look at West, $1 million, of course, more than last year. And that hasn't come across to other property types just yet. Huge declines in the apartment townhome price ranges right around here. And then slight corrections here. And then we have a huge decline right about here for 800. No, this is 700 to 800,000. So huge decline there. And then relatively close to last year for this particular price segment. When we take a look at Northwest, so you can see again for Northwest, $1 million plus, more than last year. So we're having more sales, and pretty close for 800 to $1 million. And anything below that is lesser than last year, but I think these are going to start coming up pretty soon. When we take a look at North, again, North $1 million sales, more than last year, and now the price segments for this part of the market is still down. We are very, very close for right around here, which is your 400 to 500,000 range. So that's sort of the affordable section where people are trying to get into duplex homes or maybe low price detached, older detached homes. So people are trying to get into those parts of the market. So you do have pretty comparable sales to last year, and then slight declines right here. And then finally, when we look at North East, which is one of the worst performing areas of the city. So of course, people getting away for almost everything. Apartments, townhomes, significant decline right here. Duplex detached, also significant decline compared to last year. In fact, the affordable section of 5 to 600,000, huge decline. A lot of people moving away from that. And there's almost no sales for $1 million plus, of course, because it's Northeast, but also declines around here on the higher price range. So just declines across the board. And so this gives you a clear idea where sales are headed and how we can keep an eye on the market in terms of future sales happening and where those things will move. And if you want to sign up for receiving these market reports, the entire report, not just these screenshots, on a monthly basis, I'm going to put a link out in the description so you can receive these on a monthly basis, and that way you can keep an eye on these graphs yourself. But of course, I'm also going to keep making videos like this so that you stay updated on the market, and that is where the market's headed. So we will keep an eye for essentially as people move past the traffic light, as each price segment becomes rather unaffordable, or just the value proposition is not there anymore, and then people move down one step. And so that's how the whole market will come back for other parts of the price range and different parts of the city. And so that's it for the data that we have right now for this video. And if you want to keep an eye on the market and you want to stay updated on when I release videos like this, definitely hit that subscribe button and like so that I can reach more people and help more people in the market, because a lot of this data generally doesn't get out, and taking such a nuanced look at specific segments and property types in a balanced market is even more important, because people are so used to the last 2-3 years just applying a blanket sentiment to the entire market and rushing in, versus now taking the time to take a step back, create a game plan, and understand where the market's headed is even more important. And also, of course, I have two guides down in the description. As I've told you before, I have the buyer guide and the community guide. Both are going to be extremely useful. I'm going to put the QR codes up here so it makes it more easy for you to just get it straight on your phone. And if you're watching on the computer, you can just find the links in the description, make it super simple. And if you're planning a move in the next 3, 6, 9, 12 months, whether you're buying, selling, or investing, reach out right now so that we can design a game plan depending on where the trends are headed for that segment of the market, and set you up for success in 2025 in the Calgary real estate market. You can scan this QR code to book a call right away, Or you can just go to the link in the description again, and that will set you up with a 1 hour, no obligation consultation call. I can go into more detailed data depending on which part of the city you're looking at, and I would absolutely love to help you. Thanks again for sticking till the end. Really appreciate you guys, and I'll see you guys in the next video. Till then, take care.